There's been times in my trading career that I've always felt like there's something missing. I trade the exact same strategy, but on another day it might be slightly different, and I'm missing something. And there's that one thing that I keep missing that can't help me get over that threshold of potentially passing a funded account or maybe getting to that withdrawal phase on that one specific account that you're growing. So over the past few months, I've been able to take note of the strategies that I've been trading with, and I've also taken note of elements that I've added to those strategies to make them more profitable. Sometimes in trading, your strategy is fine. You just need that one or two thing to help you to get you over that edge and to increase your win to loss ratio and to help you with your risk to rewards and things like that. So if you are new to the channel, welcome. My name is Charlie, also known as Crew Trades on Instagram. I'm a full-time Forex trader and I've been trading since I was 16, 17, and I now am able to do this job full time. I've got extensive knowledge in all strategies and all trading ways, and now my time is to come onto YouTube and show you guys how to do them properly. So whilst you're here, make sure you subscribe to the channel and like the video so you keep getting me coming back on your feed. We'll be posting a lot of videos this year, as I feel like this year is my time to grow on YouTube. Yeah, I'd appreciate all the support I can get. So let's just get straight into the video. Let's not waste time. Let's just get onto the strategies and how we can become better together. So as we said in the intro, we're going to be going through elements in your trading that could potentially benefit your already well-known strategy. So the first thing that we're going to go through is liquidity grabs. I've spoken about liquidity grabs a lot on my Instagram, but I'm just going to show you guys a very simple example of one. So when we have the market structuring up into a potential high, the market will highlight the high and the previous low as potential liquidity. So in this example, we just have a trending market. And what we want to be doing is highlighting the highest point in the market and the lowest point in the market as potential major levels that the market needs to grab liquidity. But what do I mean by liquidity? So liquidity is where we have buy side or sell side liquidity. And what I mean by buy side or sell side liquidity is if we break above this high, the typical trade that is going to happen around this zone is people are going to get a long position, so people are going to be buying. And what this is going to cause is a lot of influx of buying pressure. If the market then breaks down, what does that tell us? It tells us that that high has been broken and potential traders that got into that buy trade have now been stopped out. And once people get stopped out, other people have to pick up those positions, and that will cause liquidity for the market to then potentially impulse back up and then have the sell-off that it wanted. So above this level, also what we're going to have is stop losses from people that were selling up here. So we kind of create this bracket order across the market where we have buy orders created around here with their stop losses down below here. We have people that are in sales from here that have their stops above this high, which got swung, okay? So up here, what we're going to have is buy side liquidity, and this level is going to be where we're going to be looking for potential shorts with other technical analysis involved. And of course, it's going to be the completely opposite for the other side. So if we have a downtrending market, we're going to mainly highlight the previous high and the previous low. And then if the market wants to swing this low, like so, and then run up and potentially break structure, that is going to be the liquidity grab. But the real important thing with this is, of course, it's going to have people buying down here at a potential demand zone. And once that low is liquidated, then stops are going to be hit. If you pick them stops up, it's liquidity. In addition, people are probably going to be shorting on the break below this low, and their stops are going to be above this high, so they're going to get stopped out as well. Why is this so important, and why do we need to be aware of it, and why would I add this to my trading to benefit myself? So the reason we add this to our trading, and it's very important, is because we do not want to be trading in consolidation phases, and we do not want to be trading in a market where there is no liquidity. So that's one element that I added to my trading. Don't trade in consolidation zones. Wait for those liquidity grabs and then trade after the market has grabbed liquidity and confirmed to you that the market grabbed liquidity and it wasn't just a break up of the level. So in this example here, you can see the market is just downtrending. And unless we buy these retracements, so if we sell at these retracements, we're not going to be making a massive profit. So what we want to be doing is waiting for the market to potentially swing this high or this low. Okay, so all I've done is highlighted the main levels in this trading point and zone. What happens is the market then runs and grabs this high. As we mentioned before, buyers will get in at this market. Okay, and if we come back down, they're going to be stopped out. In addition, people that were from short here probably have their SLs above that high as well. All I'm going to do is highlight a previous low down here and wait for that to get broken as a kind of confirmation. But yesterday I did enter a trade just purely off a liquidity grab like so, but it's very risky, so I wouldn't recommend doing it. But as you can see, we do have a nice move down and we do get a break below that low. So now we are looking for shorts, and we are fair in the bias of looking for shorts purely based on the fact that the market grabbed that liquidity. And we know there's strength in the market. We know there's liquidity, and it's going to cause volatility as well. And as you can see, we do get a move back into this small supply zone that created the break below that low. And then the market was able to continue on down, which then was able to break this next low quite nicely as well. If we do have a break like this is not a liquidity grab. This is just a general break of structure. It's just a continuation of structure and things like that. So that's one element that I added to my trading. Don't trade in consolidation zones. Wait for those liquidity grabs and then trade after the market's grabbed liquidity and confirm to you that the market grabbed liquidity and it wasn't just a break above the level. So the second thing that we are going to be going through is a 3 candlestick hold below or above the level or at the level point of interest that we're looking at. A lot of people will trade tap-ins to imbalances, tap-ins to order blocks, tap into whatever it may be. But tap-ins for me weren't sufficient enough, and I waited for at least 3 candlesticks hold at the level. So let me go through and explain to you how I did it. So we'll just start off by drawing a simple schematic. So let's say, for example, we have an impulse and we have a nice demand zone down by here, right? Just something very simple. And we want the market to come into this zone. What a lot of people will do is they'll play a tap into this zone, and then they'll have a small rally and they'll be in profit, and then it will sell off. Okay. And they haven't been able to get that proper confirmation. So let's scratch this and I'll show you how to do it properly. So what we're going to be doing is waiting for a proper confirmation hold at the level. So when the market comes into this zone, you want to see around 3 candlesticks hold at this zone, and then a break above this zone, and then a retest, and then a continuation on. Okay, it's called a base rally, drop rally, I think, something like that. But basically what we're going to do is wait for the market to kind of consolidate at the zone. We're going to want to see candlesticks holding above the zone, and then we're going to want to see an impulse from that consolidation, a retest, and then a continuation to confirm our trade even more. So let's look at some examples. So this example is on a 1 minute time frame, but I would suggest looking at higher time frames. I've just found a quick example for the YouTube video to give you an idea of what to do. So for example, what I've done in this trade is I've seen this previous high that we've broken above, and I want the market to retest this previous high. And as you can see, we have 1, 2, 3, 4 candlestick holds above that level, which is creating a nice uptrend. Okay, so this is really good for me. What you don't want to see is a tap here and then a massive impulse. Okay, because that's really, really hard to get into sometimes. So you want to see a bit of consolidation. And once we see the consolidation, we want to see a break above this area and a potential retest. Okay, so we give ourselves a bit of room and we want to see a break above that level now. And then we do get a small retest here. And then that's confirmed that the market will continue on up. Okay, so this small consolidation phase may help you from potentially getting stopped out at specific levels that you shouldn't have been in anyway. Here is another great example here where the market has ran down, created this low, it's broke structure, and then it's coming to retest this higher low that was generated. So what the market's done is come into this specific zone. It might be an imbalance, might be a fair value gap, whatever it may be. And you have 1, 2, 3 taps, then we start pushing up, okay? The market then does break above these highs, okay? And you do get a small retest into kind of these highs maybe, but potentially you want to see a break above that high and then a massive retest into that zone, which we get given there, which is very nice. So you kind of have this previous high, like these previous highs in an area, and you can see we get that retest, and then we can see the market continue from there, okay? So it's just kind of trading this structure where the market's consolidated for a bit, picked up the liquidity it wanted, and then was able to move. I do not like playing tests like this and then massive impulses. Your risk to reward is going to be off. It's going to be a very risky trade. I'd prefer to wait, get my confirmations I need, and then take the trade I want. And the third and last confluence that I use in my trading is a very simple one. It's volume, but not many people use volume as effective as I do. So as we mentioned before, we look for liquidity grabs, but if we add volume on top of those liquidity grabs to confirm that there is people getting into the market at that specific time so we can use that zone to our advantage, wouldn't that be amazing for us as traders to be able to have double confirmation on something? So let me just explain what I do and how I do it to help you guys. So as you can see in this example, we do have a high and we do have a low down here. So the market's kind of just trading within this trend. So ideally what we want to be seeing, as we mentioned before, is one of these levels to be liquidated. So then we can trade from kind of what we get given. So as you can see, the market is running up here and then it pops above that high. As you can see at the bottom down here, the market has been able to pump up some liquidity So then what we need to be saying to ourselves is we want to see a breakdown from this market where we could potentially look for shorts, and the volume has told us there's a lot of people in the market here. And this also confirms it's a liquidity grab, by the way. And then, of course, we do get a large sell-off, retest, and then a continuation on down from there. So the main secret I use volume for is to identify if there's liquidity getting pumped into the market at a specific zone. If there isn't volume kicking into the market on a break above a level, that's typically going to be a simple break at the level, and it's not going to be a liquidity grab. A liquidity grab influences stops to be hit and people to get into the market. They can hit their stops and things like that. And when we actually do have a break of a level, it doesn't just grab liquidity, it's just a simple break, and it's going to continue from there. So if we have a look at this example here, you can see we have this high presented, this low presented, and if we have a look at the volume, it's quite neutral. On the volume, we can actually put an MA to kind of get an idea of the average. And as you can see, the MA hasn't really moved once we have a break of this level. So a lot of people potentially are going to be looking for shorts at this level. But to me, from looking at the volume, it's just going to be a continuation, which it was. Let's just have a look at one more example just to show you how powerful this can be. So we have this major low given by here, and we have the major high. So we're looking for the market to swing one of these levels, so then we can start trading. So ideally, we're going to look for this low to be swung. Have a look at the volume when I play this. So we have a break below that level, and then look at the volume kick in. Look at the volume shift kick in when we're breaking through this level. And then, of course, we get a breakup of this minor high. Going to look for this high to be broken and things like that. And then we get a retest, and then we get another retest, engineer liquidity and things like that. And then we do eventually break above that high. But look at the volume coming into that market at that zone to identify to us that this is not a break below the level. It's just a liquidity grab. I hope you enjoyed this video of 3 areas of confluence that I've added into my trading to make me a more profitable trader. As mentioned in the intro, if you did enjoy the video, make sure you drop a like, drop a subscribe. I would massively appreciate it. I need the support I can get. Yeah, here's to more videos coming out towards the future.